Hi guys, it's Callum Newman from the Daily Reckoning here. Just another one of our video updates for you today. Always a big thing every year is Warren Buffett, the man they call the Oracle of Omaha. The big thing is when he releases his annual letter that he puts with the annual report for his company Berkshire Hathaway. He just did that on Saturday. One of the most notable things about Buffett and Berkshire Hathaway is just how much money it has. They've got over $100 billion in cash that he has to try and find something to do with. Now, the reason he's got so much cash is he thinks stocks are too expensive for him. And he has, one of the perils of having that much money is he can only buy, or invest in really, really big companies when you're allocating that much money. Small caps and smaller companies, they're just too small for him. They're not going to change the return he can get for his investors. Now, always interesting to see what big guys like him are actually doing with their money, not so much what they say. Most of that $100 billion in cash that Buffett has is being stored in the US Treasury market, which is US government debt. Now, he has a choice there across three different sectors in that particular market. There's US notes, bills and bonds, and that's to do with the time frame. So bills are short term, notes are medium term, and bonds are long term fixed income invested. Buffett has that entire $100 billion of cash in short term US treasuries. So that's the bills that mature in less than a year. So he's keeping that money in very short-term debt instruments. So if you've been following the financial news lately, you know there's a concern about rising interest rates in America, the 10-year note pushing towards 3%. What it says to me is Buffett is basically banking on high interest rates coming because he's not prepared to buy bonds with their current yield because he thinks they'll lose value with rising interest rates. So he's basically just keeping his options open for any opportunities that come along. So if you've been following that debate about higher interest rates, Buffett's a very interesting man to watch. His business owns so many companies in America that he has his finger on the economy and he sees all the results coming in of all the businesses that he does own. As I pointed out in today's Daily Reckoning, he seems to be pushing or positioning Berkshire Hathaway for growth in US housing. Some of the few acquisitions he made last year through his subsidiaries were around the real estate sector. So, just a small takeaway there from Warren Buffett. It appears that he's positioning for higher interest rates in America and a stronger real estate market. If you like these updates, please like the video so that we know that to keep doing them. And of course, if you don't subscribe to the Daily Reckoning Australia.